Hey, this is Geoff Gannon, and you're listening to the Focus Compounding Podcast. This is the podcast where Andrew and I talk general investing concepts. If you want to know more about specific stocks I like, go to focuscompounding.com, where you can read stock ideas written up by me and other members. Membership costs $60 a month, but if you use the promo code podcast, it'll be $50 a month for you. Andrew and I also manage accounts for investors. To learn more about our managed accounts, email Andrew at info@focuscompounding.com. or text or call Andrew at 469-207-5844. That's 469-207-5844. And now here's Andrew with your regularly scheduled podcast.
Alrighty, we are back. Happy Wednesday. How is everybody doing out there today? Hope you are doing well. My name is Andrew Kuhn from Focus Compounding Podcast. Mr. Geoffrey Gannon, how's it going over there?
It's going great, Andrew. How's it going with you?
It is going fantastic. As always, we hope it's going fantastic for everybody else, and you're having a great week so far. So today we are going to be going over and chatting with a friend of ours and someone that you've talked to for a while, and his name is Clayton Young. He is at Coinvesting on Twitter. That's KENKYO Investing. And his website is www.kenkyoinvesting.com. And we're going to chat a lot about that, but he has a pretty unique story, and I think it's going to be pretty interesting for a lot of people to hear. So before we talk about his investing, what he's currently doing, we're going to just get a little bit of a backstory on him. You know how I love stories and how everyone's story is, completely different. The narrative's always being written, and I think Clayton is actually a pretty good example of that because he is doing something where he's currently at, which we're going to chat about. So, Clayton, how are you doing here today?
I'm doing well. How are you guys?
We are doing great. Thanks so much for coming on. You are in the Philippines, right?
That is correct.
Yeah,
I'm in the middle of nowhere, Philippines. Yeah.
In the middle of nowhere. So it is 7:10 p.m. here in the great state of Texas, in Dallas. So what time is it there?
It's 8:10 in the morning.
Yeah, so good morning. Good morning. Cool, man. Well, as I was saying, we, like I said, we always sort of talk about people's stories and how they got into investing. But before I think we hit on the investing part and sort of what drew you to it, I'm really curious to hear about your story. And if I am correct, you spent your childhood in Japan and you came to the United States for college. So you really only were here for a couple of years or whatever. So I'm really curious sort of how that came about and about your childhood in Japan. And maybe you could just sort of hit on that and give us a little backstory on you.
Yeah, so it might get a little long, but my mother is Japanese and my father is American. And they got split when I was 2 years old or something. I must have been like a troublesome baby. But my mother took me back to Japan, remarried. I grew up in Japan, lived a pretty typical Japanese life. And she was actually an English teacher. So the reason I speak English now is because she would ignore me if I spoke to her in Japanese. And I went and learned Japanese just like all the Japanese kids do, went to school. So right around when I was 17, it's probably the one and only big argument I've ever had with my mother was the college argument, because she wanted me to stay in Japan and I didn't feel like I was getting anywhere by staying in Japan. So we fought, I won, I moved to the US and started going to college, then went to grad school, worked for a few years, and then my work sent me to the Philippines, so I'm here now.
Yeah, that's definitely pretty interesting. So what made you want to come to the United States? Was it because you already spoke the language, or what sort of drew you here?
Well, part of it was that the program my mother wanted me to join was an English program at a Japanese university, which I think you could probably guess doesn't really get you very far in terms of English language skills. And I didn't feel like it was going to be a meaningful 4 years. And at the time, I was reading personal finance books, and the U.S. was this, the place to be to learn this stuff. So, yeah, that's I decided I wanted to go to the U.S., move to Texas.
Yeah, well, and how was that transition from Japan to coming to Texas, where it's 110 degrees in the summertime?
Well, actually, the weather wasn't too bad, but for about a whole year, I thought nothing other than wanting to go home. So after that was much more interesting, kind of getting more immersed and acquainted with American culture.
Yeah, no, that's definitely pretty interesting. So you came to Dallas, and then from Dallas, you went to the Philippines. How long have you been in the Philippines for?
I've been here going on 3 years in January.
And what brought you there?
All right, so after graduate school, I was working in the corporate world in the U.S., was going to grad school. After I graduated, I kind of figured out it's not really for me. And I decided to jump into a small business as a project manager in a construction company, which my mentor owns. And he sold off the company, kept me, and we weren't quite sure where my place was going to be because he sold the company. But turns out he is a partial owner in a seafood company out in the Philippines that was also struggling to talk to a Japanese customer. So he just told me, if you're interested in the Philippines, visit there. It's right, across the pond from where your folks are. Just stop by, see if you like it. If you don't, no worries. Company paid vacation, and if you do, stay there and help out. And so I just jumped here and stayed here.
No, that's pretty funny. Like I said, how stories something can happen, and you are now on a completely different path. He sold his company, and he needed help in the Philippines, and now you're living there. It's kind of funny how that works out.
Yeah.
So I was just curious. So how then did you get into investing? Did you major in finance in college, or I'm always sort of curious to hear about how the bug bit them.
Well, I do have an MBA, but Samir Patel, which you interviewed several weeks ago, he actually kind of introduced me to value investing while we were in college. So this is like maybe 2012. Yeah.
And
I went to school with him. Yeah.
Oh, nice. And then from there, did you just were you always, because like Samir, I'm pretty sure he started as a day trader, and then he made that transition over to being, I guess, like the typical value investor or whatever you want to think about it as stocks being fractional ownerships of real businesses. Did you always start, I guess, with that sort of mindset, or was your path a little bit different, or how'd that work?
I've never really traded stocks, and actually I had the Intelligent Investor book when I was 19. I read it, didn't understand it. It just sat in my closet for, I don't know, maybe 5 years before I read it again. And it kind of, I understood it more because I guess took more business classes at that point. More familiar with accounting and stuff. Yeah.
I think it's a book that you almost have to force yourself to read because everybody's written it or read it before, and everyone, I guess, references it, but it's kind of like boring. I'll come out and say it.
Right,
yeah. No, that's great. So Samir got you interested in investing, and then you read The Intelligent Investor, and I'm guessing from there you were sort of hooked. And did you start blogging from there, or how did you start investing your own capital, or how did that work out?
Well, so Samir got his start writing articles for websites, and he kind of introduced me to that part of it too. And so that I think I wrote my first article in 2014, towards the end of that year. And I'd occasionally post. I was still in grad school, and eventually, once I got to the Philippines, and I never even looked at the Japanese stock market until I got to the Philippines. And once I got here, I figured, I was going to make this my full-time job. So it's like, we're always looking for what edge do we have, informational or analytical, or what sort of edge do we have? And I looked at my toolbox and figured out, hey, nobody's really looking at Japan with, and value investing isn't very common there. So I just figured taking kind of the American value approach into the Japanese stock market, small caps, would be should yield something interesting at the very least. So that's kind of where I'm at.
Yeah, I mean, it's definitely, you're able to, I guess, use your background of being able to speak Japanese and understand and read it and stuff, and then also English as well, because like you said, it's probably a more inefficient market, I would imagine.
Yeah, for sure.
Yeah, so Kenko Investing, that is your new website, correct? That you haven't launched that yet, or that you did launch recently?
The website's been up for about 2 years. It started as a blog.
Okay.
And then I did my newsletter for the first time around this time last year. And now I'm fixing to launch a weekly coverage on Japanese deep value and magic formula stocks each week. And so that should be up probably when this podcast airs.
Yeah, and I'm curious about that. So I'm looking, I have a screenshot of something from your site. On the website, there's a short list of value-focused Japanese stocks, 48 Kenko Magic Formula reports, 2 linear company highlights, and 48 Kenko Deep Value reports. So is that more so your style is deep value then? And do you use Joel Greenblatt's Magic Formula, or what's that all about?
So it's actually not much my style. I originally started off looking at deep value stocks because I read The Intelligent Investor, but currently what I usually focus on is more the qualitative aspect of companies because I speak Japanese, and I feel that NetNets and probably even Greenblatt Magic Formula stocks, they're you start with a screen and then go from there, and oftentimes it's easy to kind of miss high quality companies. That's something you have a real difficult time finding if you don't speak Japanese. So my newsletter is generally focused on high quality companies. And when I write about deep value and magic formula stocks, I start with the screen and then pick one, write about it. And when I write my newsletter, it's just boatloads of reading, and eventually I come across an interesting company.
Yeah, and I guess I should add a little context for all the people listening. So I took this from your website. It says value investing meets Japanese equities. All write-ups are researched in Japanese, analyzed with a value angle, and published in English. So you're doing all research on Japanese companies, and then you are writing them up in English. I guess for probably people like not in Japan and that can't speak the language, for them to, I guess, read about.
That's exactly correct.
Interesting. So so you were just talking before how you start with a screen. So what kind of screen do you use?
Oh, your typical net screen or NCAV screen and Magic Formula screen.
So have you found that you like high EBIT then and high return on capital, or high earnings yield and high return on capital? Have you found that to be... Because it's interesting, because I feel like do you like that screen, Geoff?
No, I don't really like.
Yeah, I thought you talked about that. You didn't like it. Why don't you like it?
Because it turns up a lot of like busted growth stocks, things like that, controversial stocks. Yeah.
I wonder if it's more efficient though, or inefficient, I guess you could say, in Japan.
Yeah, well, I think you have to learn about the quality issues of the company. Yeah.
Yeah. So you just pretty much use it as like a place to start, Clayton?
Yeah, and that's more to, I know that a lot of people look at the net stocks and the green or Magic Formula stocks, and it's more of half of it's, yes, finding investment opportunities, and the other half of it is avoiding train wrecks. So that's kind of why I cover those two.
Sure. Yeah, that's great. So how do you typically structure your portfolio then? Like, are you agnostic towards the types of size that you look for? I know you had said small caps. Does that mean that you won't go off in, I guess, the larger cap space or mid cap space? Do you focus on spin-offs? Maybe you could sort of hit on your actual investing process.
I'm a little more agnostic. I don't really care what the market cap's at, as long as I have confidence that the business will perform well over time. So that's the market cap isn't really an issue. But my research tends to for the last year or so has tended to go a little bit over the 100 million US dollar mark, more because I have a couple of institutional clients who, need that liquidity. So they need generally a little bit larger. They don't want to go too small. But in terms of my portfolio, I think probably 2 companies are below 100 million, and I only own 3. So
you in your whole portfolio, you only own 3 stocks?
yes.
Wow, so that's pretty concentrated. Is that 100% fully invested, or do you have some cash?
I have some cash. It's maybe on my Japan portfolio, like 60%, 70% invested.
Wow. So I'm kind of curious then.
Yeah.
So what types of companies, you don't need to give the exact name if you don't want, but maybe you could just give us an idea of the types of businesses that you look for, especially with employing that sort of concentration. I mean, even by Geoff and my standard, that's pretty concentrated. Mm-hmm. So I'm curious, like, for us, we have certain guidelines of companies that we look for, and probably more importantly, things that we look to avoid because we are so concentrated. So I'm curious if you have some sort of rule set or guidelines or something along those lines that you follow because you are so concentrated.
It's all heuristics, and I'm not holding 3 companies just to be super concentrated. I'd probably buy others too if I feel like I'm really tempted to buy more in one of the 3 companies I own. But so right now, what my main holding is, I'll just reserve the name, but it's a company that does EDI software, the electronic data interchange software in Japan. And it's a tiny little company, but they have something like almost 40% share in that specific software category. And they have a huge cash position, but the CEO is also looking into moving into other data-related services, software services. So it's kind of one of those situations where it doesn't cost a whole lot to grow the business.
Sure. And is that like low, I'm guessing do you look for companies that are kind of like low capital expenditures, high free cash flow generative businesses? Is that the type of company that is, like a lot of other software companies?
Yeah, it's like that. And the other thing about it is, kind of like with ERP systems, when a company is talking about implementing ERP systems, the first company you have in mind is SAP or Oracle. And so once a company is established enough and has enough market share in a specific area, I think that you can establish your mini SAP or Oracle status to where when a company is talking about needing EDI software, middleware, the first name that pops up is either this company I'm invested in or their one other competitor. It's 2 companies own like 70% share in the market. So I feel like that's kind of a big benefit for them too.
Sure. That's great. So what's your research process like? I'm always also kind of curious to hear about that. For example, like, do you start with a 10K or how's your sort of process, I guess, with that?
So to start from idea generation, I have 2 approaches. One is recent. It's the deep value and the magic formula screener. I never really used screener until I started doing weekly write-ups for my new service, but that's one way. Just pick up stocks over the screener, then start with the numbers, then go into quality. But the other process I'm more used to is just doing a whole boatload of reading, whether it's investment blogs in Japanese or the Nikkei, Toyo Keizai, which is another newspaper, Diamond JP is another business-oriented website. So I do a lot of reading, and eventually I come across a company that sounds interesting, then I'll start reading more about it. And then first thing I'll do is download the last several years of the Japanese equivalent of a Tenkei. It's called a Yuho. And then I'll look at every last few years of their earnings presentations. Then I'll Google search like any interviews that the company took on in the past, and like what any other news articles or other people's analysis online in Japanese, of course. And then that's probably like, yeah, most of my research is done that way.
And then so you typically write up. What kind of research do you do after you buy the company?
After what?
Like, how do you take, like, after you purchase the company, do you revisit it, I guess, every quarter or revalue it every quarter? What's your process like with that?
No, I don't really do quarter to quarter stuff. Like, I probably won't even check the stock price for 6 months. It's just, I'll come back to it maybe once a year. Just kind of, yeah. Whenever I see the update presentation for the full year, that's when I'll kind of take another look.
Yeah, no, that's pretty good. So Geoff and I, obviously, when we value companies, we think about what they will look like 5 years into the future. Mm-hmm. What's your process on that, and how long do you typically look to hold a company for?
Well, I really don't want to sell, so when I buy something, I guess I tend to think of it as being very lazy. So like, I want to be able to buy this company and just hold it until indefinitely, so I won't have to find another idea. So that's kind of why, I really, that's a source for hesitation to purchase companies too. But I feel like when I do buy one, it's just kind of, I'm generally super confident in it. But usually I think I look more on a shorter term, more what's 2 years ahead, what's 3 years ahead for the company rather than 5. But yeah, generally pretty similar.
So I know on your website you had a couple times where you had someone writing up that they visited Japanese companies, visited Japan, and they were a investment manager from outside Japan. Can you talk about what that experience was like?
Yeah, so it's in June I made my first visit to Tokyo with a client, and had management meetings and such for the first time. So I feel like what I get from those visits is one that you don't really get a whole lot on the first visit, I don't think. And another one of my clients was telling me kind of something similar too. He was trying to get one of his companies on the phone and trying to ask them some questions, and they wouldn't answer nothing until you're in the same room with them, taking the time to meet. And a lot of times I feel like their guard is up for the first 20-30 minutes, and once they figure out that you've done your research and like you actually know something about the company, then they're more open to talking about their business. And that's not like in every case. There's more open. There are people who are way more open from the start. There are companies that are just releasing very little information in management meetings and such. So you get a mixed bag.
Were you the translator? Did your client speak Japanese?
No, I was the translator for the first trip, and I did 2 trips in the last few months, and we had a translator for the second.
So what would your biggest advice be for investors outside Japan who've never invested in Japan? What kind of differences they should expect, or what they should know before investing in Japan?
I think a lot of it also depends on your investment style. So one thing, I interviewed Brian Grosso, which is the first client I went to Japan with, and one of the things, he's generally more deep value oriented. And what he was telling me too was that originally when he's investing in these stocks, you look at the mean reversion to happen in 3 years or so, but in Japan you kind of need to be very patient, and felt like 5 to 8 years was a more appropriate time frame to give yourself when you're doing deep value. And on the other hand, the other investor I went with is a lot more quality and growth oriented, and she's growth is kind of its own marketing material. So I think once a company starts growing, people eventually know about it, and it's all over every business paper. And so what he wants to do is like figure out how the growth is going to happen. And like one company he's invested in, which I won't give the name of, but they sell, how should I say? They sell products, of course, but they managed to basically reduce their raw materials in half and increase the per piece revenue for the product they sell. And it seemed like that wasn't reflected in the market yet, and it definitely wasn't on the financials yet. And they just got done building a production facility for the new product they're selling, and so the price looks like high teen EV/EBIT, but with your input being lower and your revenue per piece being higher, his investment case is that their operating income is going to grow quite a bit to make that multiple lower, and assuming market cap stays the same.
How do companies in Japan, I guess, and managements in Japan view capital allocation? Are they pretty good, do you think, about buying back their stock or paying dividends? What are your sort of thoughts on that?
I think I don't feel like a lot of managers pay much attention to that. Like lately, with the corporate governance reform and stuff, ROE, people pay more attention to ROE now. But I really don't think. I think people are starting to pay more attention now to like buybacks and paying out dividends, offloading cash that they're never going to use. But generally speaking, compared to the U.S., I don't think Japanese managers pay as much attention to it.
Our listeners probably don't pay enough attention about Japan to know what you're talking about with the corporate governance reforms. Can you talk a little bit to us about that?
Okay, well, so Japan's kind of had I think is known for bad corporate governance for a long time. Like T. Boone Pickens is an example from, I want to say the late 80s, where he purchased, I think, like a quarter of a auto parts supplier that was part of the Toyota family, and he couldn't even get a board seat. But Toyota had less ownership stake in the same company, but had 3 board seats, while T. Boone Pickens could get none. And that's kind of like very descriptive of Japan, governance or allergies to foreigners or whatever. And that's been seen as a problem. And now, with the prime minister now is kind of pushing for better governance. So it's kind of shifting from the main banks, and the government used to keep the businesses in check, but now that businesses have a lot of cash, the banks they're not really borrowing money. They don't really have to suck up to banks, so they're doing their own thing. And now it's kind of shifting more towards, okay, shareholders do have power, whereas, 2 decades ago, it's like, oh, you own shares. Corporate ownership's more of a, collective stakeholder thing where your customer has a say, your supplier has a say, shareholders have a say, and your employees have a say. So I think it stems to corporate ownership in Japan. It's viewed very differently than in the U.S., where it's like shareholders are the owners of a company. In Japan, it's a little different. It's employees own the company, shareholders own the company, customers own the company, suppliers own the company. Like everybody has a say in it, and I think especially employees. So I think the governance is changing a little bit because employees had a lot of say for a long time, and they still do. But people are starting to pay attention to what shareholders have to say.
So for the corporate ownership part that you just sort of talked about, are the companies more controlled then? I mean, and is there any activism that takes place in Japan?
Active investing hasn't really performed well in Japan. I haven't really read any news where like a foreign active investor came in and like something ended well. If I had to name one, it might be like Fanuc, that they started paying dividends and stuff. But no, generally, like Japanese don't like foreigners coming in and telling them what to do.
Yeah, I had read some things about people suggesting that when they do any sort of activism in Japan, that they avoid talking about it publicly, that they prefer talking to management privately about it.
Really?
Yeah.
Yeah.
Why do you think is that? Just because of the culture change, or?
Well, the kind of letters, I think. Yeah.
Yeah, I think it's mainly a cultural thing. Like, I don't know if you've ever been to Japan, but like, confrontation is just not the way. Like, nobody. It doesn't end well in Japan. Like, you won't see it. You have a whole population of people trying to avoid it. I'm kind of like that too. Growing up there, I don't really do confrontation. I had a real struggle dealing with the very direct American tone until
I was going to say, it's got to be a lot different.
This is just an American way of talking,
Yeah, sure.
So what kind of strategies do you think could work well in Japan? I mean, I guess the two obvious ones for the people listening to this podcast are the sort of Ben Graham type approach and the sort of Phil Fisher type approach, right? So how would someone go about trying to do either of those things in Japan? Like, what would their process be?
I think for deep value investors, your main it's not really a process, but like adjusting your expectations on like how long your investment's going to play out. So kind of like that I said earlier. If you're looking at a deep value stock and you're saying, okay, I'll give this stock 3 years, see where it goes. Just forget about that. Say expect 8 years. For mean reversion or whatever. And for more quality-oriented people, that's a tough call. I don't know how. Like, I have a hard time imagining being a foreign investor looking for high-quality stocks and looking at Japan and finding ideas. And that's because for every one piece of useful article that you find in English, there's about 20 in Japanese that you don't have access to. So I guess I don't know on the high quality stuff.
Well, they could use a service like yours.
Investor. Yeah, fair. Promotion, yeah. Subscribe to my service.
There you go. Have you ever thought about writing for Japanese clients, U.S. companies, and then translating it to Japanese?
Well, I feel like I'm a much better. I prefer reading in Japanese and writing in English, and
really?
I think part of it's that I spent college and grad school in the U.S. and I was actually living there for about 9 years, and by the end of it, I felt like my language fluency, in terms of writing at least, having spent um, nearly a decade immersed in English, I'm actually much more comfortable writing in English. I've started off writing for Seeking Alpha, and every piece of published articles I have are in English. So I've actually tried writing one Japanese article for, not for publishing, but for a friend of mine to see. There are a couple guys that own a website called Buffett Code in Japan, and every time I go to Tokyo, I meet up with them for coffee or beer. And, what they do is they build a database with financials for Japanese listed companies, which, yes, you can find that on Morningstar, Bloomberg, or whatnot, but like a lot of times you can find like segment data in Japanese filings, but you won't really find that in the big institutional services. So what they do is it's more retail oriented, but they build a website that makes Japanese stock data way more accessible, and it's free. It's only available in Japanese, but I've been trying to push them to start doing content stuff because it would be more interesting, and I just gave them an example article. That's about it.
So do you think there are many value investors in Japan, and are there many long-term investors in Japan?
I think it's starting to grow. Even just 2 years ago, like when you look up value investing on Japanese internet, like you might find a couple bloggers, and they're like, definitely deep value. They've read Intelligent Investor in the translated version, but they don't really know about Howard Marks or Marty Whitman, or like some of the there are plenty of great investors that have a lot of published materials, but the only real one that I feel that the Japanese value investors have known or read about is Ben Graham.
And then what do you think about the time frame of investment?
I actually came across what was it, a research paper or something by Misaki Investments about a year ago that noted that something like 70% of Japanese investors hold their positions for less than a year. So I would say pretty short-term oriented. I'll have to go back and look for that and send you the link or something, but yeah.
Yeah, so my experience investing in Japanese nets, and I think some other people shared the same thing with me, is that a lot of Americans who invest in Japanese nets were surprised when the stocks got some momentum behind them, just how far up they went for so long being dead. So I wonder, do you think momentum investing is something you see in Japan?
I guess so, yeah. I actually don't really pay too close attention to prices, like day-to-day changes and stuff. So I wouldn't really be the guy to ask, but I can see how that would fit in culturally.
Yeah, I mean, what in terms of like retail investors, what do you think is the differences between American and Japanese retail investors?
Well, I think for one, there aren't. I haven't met too many. Like, I got a couple high school friends who's like, yeah, I guess I invest sometimes, but I mostly leave it to like whatever mutual fund they have. My friends that I've talked to, there's just a couple high school friends. They're very like surface level retail. I don't think they've ever picked up a investment book in their life, but it's just kind of like very cut and dry. Do you think the stock will go up? And I don't think most people really look at it as, hey, it's one shares, partial ownership in a company. So like, look at the financials and per share earnings or whatever. Like, I don't think people really connect the dots that way. It's just like I have stock, and does it go up? Does it go down?
Sure. Do you think that's sort of
Feels more
the
like
general?
a gamble.
Do you think that's sort of the general consensus in Japan?
The short answer is I have no idea. But that's just a couple of my friends who were like, "Hey, I bought shares in this bank because whatever, and I don't know if it's going to go up or down." Like, then why'd you buy it?
Sure. No, that's great. So one of the closing questions that I always like to ask guests that come on the show is, what are some ways you think individuals listening can improve as investors?
I'd just say read, and then get your hands dirty.
Yeah, so I would agree with that. We've talked about before how, and Geoff's talked about that a lot too, and even I fell into that, and I think a lot of people can relate to it. At some point in the evolution of learning about investing, you kind of gobble up probably every financial book you can, and really, I think once you have a set of fundamentals down and how to think about investing, I guess, and how to think about valuing companies, from there, the only way to improve is to just read a bunch of 10Ks and learn about a bunch of different businesses. So I would completely agree with that.
Yeah, and my rule of thumb is whenever you make a mistake, just call it tuition.
Yeah, definitely. And I completely agree with that.
So can you tell us a little bit about what thing you're launching in the next month or so on your site?
Yeah, so I'm launching a Kankyo Deep Value and Magic Formula stock coverage. So what it basically is what I'm trying to build is a tool to help investors better understand Japanese companies. And what I offer is a net screen and a Magic Formula screen. And so I think a common problem for investors looking into Japan is that most often you have no idea what the company actually does, especially the smaller the company gets. So in these screens, I have listed your NCAV, your price to NCAV, and your earnings yield and whatnot for Magic Formula stocks. But I also added a couple 2-line blurbs about what the company does, and each week I'll cover one company for Deep Value company, one Magic Formula company, and write up about them. And eventually I'll have a much bigger comprehensive database on Japanese companies where you can look at the screen, know a little bit about the company. If it piques your interest, then you read my report, and the reports are maybe 1,000, 1,500 words long, and it'll give you a good idea of what the company actually does. So, yeah, that's what I'm offering now.
And so where can people sign up for that?
On my website, thankyoinvesting.com, and I actually made a coupon code for the Focus Compounding podcast listeners, and that's FC Podcast would be the code. I'll send it to you guys a little bit later.
All right, and we'll put that in the show notes.
Yeah,
right?
and maybe if you could include or email over, what we can do is also include a report. Maybe I could tweet out a report or include a report in the show notes so people could just see a sample of it and see if that's something that they would be interested in. Cool. Well, yeah, if anyone out there is interested in Japan, I guess as a country, to invest in Japan stocks, he's definitely a good resource to look for ideas and learn about it. Like we sort of talked about, he translates it and writes about it in English, and Japan probably has a lot of inefficiencies, I would say.
Yeah, it's the best information on small Japanese stocks I've read in English.
So there you go, and that says a lot coming from Geoff. So if you want to check that out, I'm going to put the link to his website and his Twitter also in the show notes, and then I'll see if we could also include a sample report for people to be able to read. But so Clayton, I can't thank you enough for coming on. It was definitely interesting to learn a little bit about Japan. Like I said, I think it's a market that I never ever hear people talk about, other than maybe Geoff when he talks about the net situation in Japan. So I can't thank you enough for coming on.
Thanks, Andrew and Geoff. I appreciate you inviting me.
Definitely. We'll bring you back on to talk more like about companies in the future. So that'll be fun. So thank you everyone for listening. We have more guests coming on in the future. This was a lot of fun. If you do want to help us out with the podcast, feel free to give us a rating and review and subscribe to the iTunes. That helps grow the podcast, and Geoff and I would be greatly appreciative of that. Other than that, Geoff, do you have any final closing remarks?
You can read my blog at Gannon Investing, and you can follow Andrew on Twitter at Focus Compound.
At Focus Compound. You got it. Alrighty. Other than that, we hope everybody has a great week. We'll see you next Wednesday. Take care.
Hey, this is Geoff Gannon, and that was the Focus Compounding Podcast, the podcast where Andrew and I talk general investing concepts. If you want to know more about specific stocks I like, go to focuscompounding.com, where you can read stock ideas written up by me and other members. Membership costs $60 a month, but if you use the promo code podcast, it'll be $50 a month for you. Andrew and I also manage accounts for investors. To learn more about our managed accounts, email Andrew at info@focuscompounding.com or text or call Andrew at 469-207-5844. That's 469-207-5844.